Hello, Mark Homer. Welcome to Mark My Words. I get loads of questions, and what I'm going to do now is run a Q&A giving you some answers to the questions which we've received through recently. But before we do, make sure you like and subscribe. Why am I buying some buy-to-lets at the moment? Well, the market is depressed. Rents are going up and up. Little single lets, the yields are increasing. I just think, rents were 550 probably 2018. Now we're knocking on the door of 950 for the same 3-bed property. Capital values have come back maybe 15%. I just think, things are looking pretty good for buying that sort of stock. These are comments in response to why you should never pay your mortgage off early. And just to recap, in that I was talking about getting a long-term fix when it was cheap. Clearly mortgages are less cheap now, so you'd be in a very good position if you sort of gone ahead and done that. Yeah, we've got a few comments. Ridiculous, it's always good to be debt-free. Well, I'm not sure that's necessarily true. It is if you haven't got a better home for the money that you're borrowing against your home, but if you can, say, invested in little single lets or maybe HMOs, little single let with a mortgage, even if it's just yielding at 6 or 7%, and let's just say capital growth is 5% over time, if you just remember those numbers are based on the, let's say, £200,000 purchase price of the property, but you're only going to invest, say, 50,000 in a deposit and some refurb, and so your returns are multiplied, and I suspect you'll be getting 15 to 20% net return on your £50,000. So can you borrow money on your own home for less than 15-20%? Absolutely. Now you probably are going to be spending more like 4%, 4 or 5% on a long-term fix, but if you can get 15 or 20% return elsewhere, maybe that's a good deal for you. Depends on your other circumstances, depends on where you are in life, your age, your other income. It is often not a good idea to pay your mortgage off. Another person says, nonsense, pay off your mortgage early, thereby saving thousands of pounds worth of interest, and then interest that saved money. Okay. Respectfully disagree. Inflation is paying down my mortgage. My cash can work much harder. Well, Alan Smith is right. Inflation at the moment is 10%. If you have a £100,000 mortgage this year, and inflation is 10% over the next year, it probably won't be, it's probably going to drop. But if it was, or let's just say your loan was 100,000 a year ago, over the last year, inflation has paid down your mortgage to £90,000. You still owe 100,000, but your income should have increased by 10%. Now, it doesn't necessarily all happen in 1 year. Lots of people's incomes will not go up for a number of years. And if you've got rents, you're renting your properties out, of course, rents are increasing quite significantly at the moment, more than 10%, partially because of all the inflation that's going on. So, that is the other reason for not paying your mortgage off early. Inflation erodes the value of the debt. So if you're paying at the moment, say, 4% interest on your mortgage, and over the last year inflation has been 10, the net cost is minus 6%. Let's say over the next year, inflation is more like 5% because it is probably going to reduce quite a bit. And let's say you pay 4% mortgage, then your net cost of your mortgage is minus 1%, isn't it? I know you might not have the money every month to pay the mortgage, the extra mortgage, and if you haven't, you shouldn't do it. But just think about investing that money elsewhere where you can get a higher return. And remember, inflation is paying down your mortgage. Ian Newman says, in response to that comment of Alan Smith, I'm sorry, but I don't see how your cash is being devalued at a rapid pace. Wages aren't keeping pace. Stocks, bonds, gold, silver, cryptos, all tanking or not moving. Well, I don't think that's true, Ian, is it? I think lots of investments, if you just buy tracker funds, they're probably going up 8, 9, 10% over the long term on average. So you can go elsewhere, but it is easy just to see the sort of negatives. Renters' white paper, anti-landlord legislation, interest rate rises, an absolute nightmare for levered landlord, incorporated or sole trader. Let's see how far the Tories sell their votes out. Dan has got a point. The Tories turned against landlords. There's been a lot of legislation, tax increases, but The upshot of this is that there are less landlords coming into the market, more have been leaving than coming in, and that is pushing rents higher and higher. So actually, is it a good place to be? Yeah, I'm thinking it is pretty good now. I'm not sure the government have helped tenants one iota. I suspect they went out there, spouted all this stuff, which they thought would be politically popular. Tenants like the sound of them bashing landlords, but all that's happened is there are less properties to rent, so rents have increased. Michael Gove likes to say that when a landlord exits, the property doesn't disappear. A homeowner buys, and he has sort of got a point. First-time buyers are up, at some of their highest numbers at the moment. Maybe they're taking advantage of reduced property prices. Certainly at the low, more people are buying smaller properties because they can't afford the mortgages on the bigger ones quite so much because interest rates have gone up, and obviously gas and electric's gone up as well. But prices have still fallen and there are still some deals out there. If you're interested in learning more about property, we've got a free report just down there in the description. Kenneth says, hi Mark, 6 very powerful points, but in my case I'm 78. My buy-to-let party of single let seems to be coming to an end due to looming mortgage redemptions and interest rate rises. Doesn't make them viable. As a final phase strategy, can only see paying down and selling as a final option. Any thoughts? Yeah, I can see what you're saying. If you're 78, Ken, it is a bit different. My stepfather's that sort of age and he's always saying, oh, should we sell some of the properties? And I'm always, because I own a few with him, I'm always saying, well, let's leave them where they are and, keep taking the income. And he's, oh, what happens when I'm not here anymore? I said, I'll just look after them, I'll sort them out. Yeah, try and reduce the mortgages. Maybe try and let rooms out, increase the yield, by maybe renting rooms, take out the properties out of your portfolio that are lowest yielding and maybe costing money every month, and then reduce the mortgages on the other ones to make them cash flow positive. The IMF, the International Monetary Fund, do some big analysis on different economies around the world. And they've just released their paper just this week. And what they say is that most developed first world economies, would be sort of European, US, interest rates, whilst they've gone up, and at the moment, base rate is 4.25% in response to, very high inflation. The Bank of England says that's largely because of Ukraine and energy prices, and also, because the supply chain got shut down in COVID, and then when it reopened, there was a lot of demand for goods and services and not enough supply, which pushed inflation up. The major forecasters say that's going to fall significantly. And the interesting point, according to the IMF, I don't think the Bank of England could say this, they'd be too worried to, but they have sort of said the IMF probably isn't wrong. I think Andrew Bailey's made noises to that effect in the last few days. The IMF says that the natural rate of interest in the UK is 0.3%. So the natural base rate would probably be around 0.3%, which would support an inflation rate of the target, which is 2%, which is way lower than where we are at the moment. I'm not saying it's going to 0.3% anytime soon, and neither did they, but that is what their analysis is showing. Why is that? Well, pre-2008, I think we had higher productivity, and we probably had a younger population, a more aging population, which is, the baby boomers now that sort of were born after the Second World War. They're out of the employment market. They're now drawing pensions, and they have a disinflationary effect. They spend less than they used to. As you get older, you go out less, you eat out less, you buy less stuff, maybe you change your car less often. So there's less demand from that sort of cohort, and that is a drag. That reduces inflation. And in addition, productivity is low, or lower than it has been, and that depresses inflation as well. So according to the IMF, the natural rate of interest in the UK is 0.3%. They think the US is a bit higher. I think Europe is even lower than the UK, probably because they are lower growth. And clearly, low growth often, usually everything else being equal, means lower inflation. So what does that mean for long-term interest rates? Well, according to the Governor of the Bank of England, interest rates are probably quite a bit higher at the moment than they will be over the next, let's say, 10 or 20 years. as an average, let's say for the next 20 years as an average. So, you know, do you want to be taking, you know, long-term fixes out on at 4 or 5%? I suspect not. You know, my attitude is, you know, I've got some long-term fixes. About 60% of ours is fixed. We're fixed at just below sort of 3% on a big chunk, which is lovely. And my own home's just 3.1%, 10-year fix. But, you know, other mortgages we've taken out since all the interest rates went up, I've gone at sort of 2.69 over base on a few. Because I suspect base in the medium term, I'm not talking about next year or the year after, but maybe within the next 5 years, is going to have to drop. And if growth drops significantly, once inflation has come back, and it will come back at some point, interest rates might have to go up more than they are at the moment at a higher rate to get inflation down to 2%. But once they've broken the back of it, I suspect the natural rate of interest is quite a bit lower than what we're paying at the moment. So other people, Tom saying, I think the wave of repossessions is yet to come. Well, you know, repossessions may go up. I suspect it's not going to be a torrent unless interest rates go much higher. And interest rates could go quite a bit higher. You know, if inflation is 10 and inflation falls to maybe 4 or 5%, they may have to jack interest rates up further to get it down to that, get inflation down to that 2% target. You know, and we haven't seen the full effect of this. Lots of homeowners were on 5-year fixed rates and they're gradually coming off those rates, and the effect of that is making its way into the system. I suspect it doesn't have such a big effect if lots of them were on 5-year fixed rates rather than all being on variable and all coming off at the same point, because that would sort of create a downward spiral of lots of properties coming on the market needing to be sold. But there may be more repos and there may be due to come. I think commercial has dropped a little bit. You know, retail, I think industrial's come off. It was very, very strong. And I suspect that there might be a bit more. I'm hoping for a little bit more sort of capital drops, but we'll have to wait and see on that. 5 days ago, house prices haven't decreased at all. They're sky high even in Yorkshire. People are fighting over cheap houses and buyers are snapping them up without viewing. UK is a rip-off. That might be true, Boss Play TV. However, in Peterborough, the cost of a lot of the houses to buy is less, including the land, is less than it is just to build a new house. So just think about that. If houses in lots of Peterborough, which is in 75 miles, within 75 miles of London, is less than the replacement value, and this office certainly is. This office is probably worth about £130 a foot, and to rebuild it, it's probably about 170, 180. And we've got lots of houses that are now worth maybe, I don't know, £150 a foot, and to replace those, so that would be, you know, in cash terms about 150,000, and to buy that house it would probably cost you about 150,000. So where's the land value? And then on top of that you've got professionals and finance and all the rest of it. So, you know, I'm not sure it's necessarily the case that house prices are sky high all across the country, because if you can't build for the price that you can buy houses for, why is anyone going to build new houses and therefore bring the cost of houses down? They're not, are they? And planning consents are still hard to get. And by the way, the government has turned against building for new houses now, it seems. Help to Buy has gone. The Tories had some pretty big defeats. The Lib Dems got them in a home county, in one of the home counties over you know, the building in sort of greenfield sites. So lots of councils across the country have now been told that they can, or councils across the country I think have largely abandoned their housing targets. So you're going to see reduced building now, because councils aren't forced to stick to you know, housing targets. You're also seeing higher interest rates now. Land values have been falling. Lots of developers have sort of said, we're going to mothball this site because we're concerned that there aren't as many sales, not as many transactions happening, interest rates are higher. Lenders probably a little bit more cautious. So this will just add to the housing crisis. There are lots and lots of sort of migrants still coming, lots of people having babies. So population is going to go higher and higher, and therefore I suspect that will support house prices and rents. Raja says, another truly incisive, informative, important, intelligent, impressive, and for me both insightful and inspirational. I've also downloaded the free report. Well, Rajesh, I mean, he's clearly a really clever guy with some great insight. So I think you need to follow what he says. He says, question, with the media and daily news predicting a huge property crash this year, 2023, this was 2 months ago, well, it doesn't seem to be happening, it maybe dropped 10-15%. The Bank of England predicting a long recession, well, they were wrong about that so far. I think we've skirted away from recession. It may still happen, but at the moment it isn't happening. Lots of people, by the way, seem to still have cash, still spending, holidays are going up, you know, there's still lots of cars are being sold, although I think towards the end of this year, I think petrol and diesel cars will probably come off, according to UBS. The prices will probably start to drop. But, you know, lots of people have still got cash, haven't they? Maybe they saved it in the pandemic, or they got sort of bounce back loans and everything else. So the Bank of England predicting a long recession with interest rate rises in Section 24. Question is it still worth investing in residential buy-to-let? Of course it is, for the reasons that I've mentioned on this video. I think, you know, yields are increasing, rents are going up significantly. Our room rents have gone from 550 to about 700 now in, I think, maybe 3 years. So yeah, I absolutely think so. And would it be better to go for commercial property? I like commercial, you know, commercial can be easier in some ways, but the challenge with commercial buildings is you can borrow less, you know, and buying below market value. Well, you can add value if you put right tenants in, but, you know, there can be other challenges. Less commercial buildings around here, and, you know, 40% deposits usually, and probably higher interest rates. So hope that gives you some insight into my thinking and gives you some answers to your and other people's questions. If you're interested in learning more about property, we've got a free report just down there. So that has been Mark Homer, over and out.